Good evening, Bueller Buys community and friends. This is Sherman talking to you tonight. I've been a part of the Bueller Buys community for 3 years. I'm part of the Lifetime group. I noticed that we've been getting a lot of new members lately. Figure it's time to do my part and just make a good sized video. Basically, get the rundown of what we do, some of my successful trades in the near term. Most of these trades that I'm going to go and review are stuff that I've done in the past month. Either mentally, one of the trades is a loss because we need to cover both sides of what we do. Sometimes it doesn't work out because we can't be 100%. But anyway, that's it. That's the intro. So I'm going to go over the technical analysis routine, the TA routine, and start there. So I'm going to do this with SPY. And what we do here is we use the price level tool. And what this does, it just creates a straight line, straight across, gives you the level that it's at. You can see this is the daily time frame. Each candlestick is equal to 1 day's worth of trading day. So I'm going to grab this level here. And the reason I'm going to grab this level here is that's the high before the COVID dip. And I choose this level here because normally what we used to do is we used to pick the COVID high, but we did dip below the COVID high not that long ago. I think it was back in October. Yeah. So really, you want a good base to have levels above and below. And by the end of when I'm done with this chart here, it's going to look pretty messy. I'm not going to use the chart once I'm done with it. I'm going to use the chart that Bueller shared with me because there's going to be a few more levels in there that's not going to be on mine. And I'll explain to you why when we get there. So I'm going to show you what the TA routine is, and it's this most simple thing. You grab the tops of these candles, and my tool snaps to the open, low, high, or close of each of these candles, and you can see it. Open, high, low, close. That's where it snaps. It always do. Normally this is on none, but mine snaps to it. Makes it a lot easier. So I'm grabbing the emerging candles, the green candles, where they close at. And just keep grabbing the levels. And these are really good levels. They are true price history. And if you don't know, the algorithms that trade, basically the bots, they use this a lot. They use the price history, and you can see I'm already making my way through them real quick. Very easy. Skip that one. We're just going to skip this one because we already have the level above. And I think I'm just going to do this until we reach above 406. So we ended right there. Okay. Skip all this. Boom. Boom. So I'll show you right here why my chart's not going to have all the levels that Bueller's chart is going to have. So you see right here we have a pretty big gap between, this is 373.88 and 379.10. So that's a pretty big gap considering the type of levels that we want to shoot for to make our to make sense of the intraday time frame. That's what these levels are used for. So I'm going to use a fib retracement. And basically what this fib is just a tool, grabs from the one point to another point, and it gives you the levels in between. I'll explain more in a different video how to use these, but essentially this is a good tool to just cheat, grab a midpoint between the levels. You see, it tells you this random 2 points that I grab. This is the midpoint at 388.59. So I do that there, and the midpoint is 376.49, which I'm gonna try to grab as close as possible. I think I missed that. I did pretty badly too. Anyway, just do that. Now we remove the fib. Now we got a midpoint, and you see, it still works. See, we gapped up here to the next day, wicked all the way up, got pushed back down below this 373 level, and the next day we pretty much opened right there, and we gap up to the next level, gap up to the next one, close there, goes right back down. And you see there's a lot of price action right at that 376.49. It's a lot going on. So let me finish the chart here just to finish it up. I'm going to clear all this anyway. I have the other chart. Boom, boom, boom. I think I grabbed that one twice. And if you don't know, there's hotkeys on this program, Thinkorswim. So I would say I don't need that level. I just hit Control Z. It's the undo. Super easy. So this is going to be one that I'm definitely going to want to grab a midpoint between. Normally I'd grab between this one too. I don't know what that level is. 403.49. Okay, I don't need that anymore. Okay, that's done. And I'll just grab a few more. Stop there. Alright, so that'll work. And if I go down to the intraday time frame, this will be the 5-minute chart. And by the way, I do have a script running that grabs me the pre-market high, pre-market low, and the current day open. This is from my friend Leland. So anyway, you see that it still works. We get out over here. You'll see what I mean when I get into these high confidence trades. See, this 406.36 is a pretty good level, evidently. All of these are, you definitely want to see some sort of price action going on between them. This is perfect. I actually mentally traded this one today. And the reason I mentally traded this is because you see we had a nice dip today, and it is Friday. We got zero-day steel expiration contracts all across the board. Apple, Microsoft, all the Friday weeklies are expiring today, so definitely don't want to be in anything too long today. And I'm not going to be swinging anything over the weekend. For my personal preference, I try not to do that. There is a lot of uncertainty over the weekend, but that's up to your personal risk tolerance. So let me look at this 403.49 level first, because I did this in real time. So you see, we got the open, we break above the level, we go down, we break above it again, retesting it with volume. Well, no, not with volume. Rather, we have increasing volume in the next candle. If I remember correctly, I think I did this on the 2-minute time frame. In my notes, I did put a few charts for real trades that I took. One of these is mental, one of these is a loss. So you definitely can see the price action going on there. See, what I'll look for is like a retest, like right here. Personally, I would want more volume in it, but it's still very strong nonetheless. You see, we got this inverted hammer here. It pushes it down, but with the push back up, it gives I would say a medium signal to get in. And you can see if you got in even after this, it's going to take some time. You got some consolidating going on. You may even really, you shouldn't get stopped out at this. We don't make a new low. We get below this level for a little bit, but we're not closing below it, which is the most important aspect. And there's going to be more intraday levels. I'll do that right now. So I'm just going to skip over to the next part of the talk, which is the daily routine. So, daily routine is, first off, let me mark these candles orange like I do on my actual charts. Okay. So the intraday levels are going to be, these include your pre-market high, pre-market low, and the current day open. You can add this one about 10 minutes after the market opens. So that's 3 levels that you get off the bat, and you get 4 more. You get the previous day high, previous day low, previous day open, and the close. And the script that I have running does grab them too, but they don't grab them from this side. It kind of starts over here instead, because I think it's grabbing them from the daily time frame. And that's not my favorite thing in the world to do. And you can see with the current day open that it does exactly that. It gets it from the start of the pre-market, which I don't like. I don't want to try to find my way there. I just want to grab them, see where it's at, and that's that. So those are the levels. And here's where it works. So say you're in one contract here. You got your nice break above, gets below, and then with that break above the 403.49, that would be your retest. So you could technically get into this trade. Well, not actually, you really shouldn't, because it's a good initiating signal. But the first 10 minutes of the market are super volatile. So that's maybe not be something that you might want to do unless you're scalping it. It's definitely not something you want to stay in for the tenure of this entirety. Because remember, each of these is 5 minutes. You're already going to be in this trade for a half hour if you stay here. Anywhere within all this, you're going to be at a loss. Even here, you'll still be at a loss until it gets to about here. And this is where I'd like to take my high confidence trades. So with the break above here, if I get into like say one contract, I would be taking profits right here because we get to the previous day level, which is the low, previous day low. So if you get into this trade with one contract, you want to take it from the first target to your neck, from the entry point to the first target. You're not going to want to try to get to this point with just one contract. But if you're in another contract, say you have 2 or 3 or 5, doesn't matter, it's more than one, you can have your runners because you already did your main trade here. So you get it from here, take it all over here. Say you sell 1, or say you sell the bulk of it. You're in 5 and you sell 3. That's a good way to manage your trade. So you're still in, doesn't get below this level, still in, doesn't break below, still in. This is another decent exit, but you're gonna have less here than you had here in most cases. But again, let's say you still know that you can still stay in it, and I'll show you a way that you can kind of stay in this trade. It's better for the smaller time frame, like the 2 minute, but it does work for just about any of them. So still, you don't close below, and here you get your green candle, and then you get increasing volume. See, that right there is a good signal, like to keep in it, because not a lot is going on here. This candle is a little deceiving. We have low volume, but we still got that nice push up, but not enough from the bears to crack it below. The bulls were able to hold it off here. And you see, we get to the next level, breaking above that. See, so at this point, you might decide to get out of volume trades because you had your increasing volume and it wasn't enough to really do much. You kind of have this long-legged candle here that's it's not really a long-legged candle, but it's pretty flat. There's not a lot going on in it. The difference between the open and the close is only about 15 cents or so. 17 cents to be exact. So you get out there, get out of your trade, right? And that's pretty much how you would manage through it if you had more than this. So at previous day close, the low, is definitely a good signal to take profits at. So it's right here. When you get this incision, you definitely see good re-entry to get into another trade. Why? You got increasing volume through the previous day low. And we already tested it too. And what I mean by a test, I mean a close over, generally with volume. And it does have about the same volume as the previous candle. So it's a little indecisive. So it's a good initiating point. You don't do anything here. And you see we're still holding the 403 level from before where we entered the first trade. You're still not going to enter here though. You're going to enter around here, in between these 2 points. And again, look back out. This is where the trade's happening. And even still, you can take it to the next level. You might want to take profits around here, or maybe the close of this candle. And you'll still have plenty of green. You got plenty of meat on the bone in this trade. And even still, you get it just about to the next target. And that's what you're trying to do. It's important to remember that it doesn't have to hit the target. You just know a good range of where it's going to go. So that's the TA routine and daily routine. What else do we have on the planner? The watch list and the market weights. Right. Okay. So I keep a pretty much the same watch list every day. I keep a routine of tickers for myself that I like to chart on the intraday time frame, because these orange levels, you gotta clear them off every day. Put the fresh ones. See, like today, I can clear off Friday's levels and put in. I can clear off these are Thursday's levels, and I can clear them off and start putting in Friday's levels. Mondays. What am I talking about? I put the Friday levels for Monday morning. Sorry, English is hard. So let me just take these off because they're bothering me, and I'll get it down to my the actual chart that I used. I used this one today by accident, and you can see we have that zone. These are zones that I keep from the watch list that Bueller creates in the morning, and technically I really don't need the watch list for SPY, at least, because what I try to do is I try to come up with the zones myself, and we get almost the exact same. What I need Bueller for is probably like the zones outside of this. I think I know why I used the other chart now. I don't have too many levels above. I think 1127 does. Yeah, definitely. Definitely. So I gotta make sure I don't use this one again. In any case, Yeah, auto zoom. Cause that was weird. So yeah, that's the. I'll show you what my daily watch list kind of looks like. These are my top watches, and I can explain to you just about all of these except maybe one or two of them are on my watch list because I will look at all of these every single day, except for maybe one or two of them. Actually, yeah, I won't look at Oxy every day, and I will not look at CRM every day. Everything else is definitely getting a look at. To start off with, I'll start typing the watch list here. First sticker, obviously, we've been working on it since the start of this video. Gotta go with SPY. Why SPY? Well, it's the S&P 500 ETF. You can trade SPX, which is the actual S&P 500 fund, or I mean index. And this is a little more volatile. You'll have the contracts be very, very wacky. Which, if that's what you want, by all means go for it. But you are going to be paying 10 times the price because SPX is 10 times the price of SPY. So that's number one. Number two, probably the Qs. This is NASDAQ 100. So the NASDAQ 100 is pretty much mainly tech. Apple, Microsoft, Nvidia, I believe those are the top three weights of QQQ. It's either Nvidia or Amazon, which is the same as SPY. Top three is Apple, Microsoft, Amazon, but they don't have as high weight in there as they do in QQQ. So if you're into tech, definitely a great ticker to watch. Here I can show you what the weights of SPY are. And I'll show you what the weights of NASDAQ also look like. So here's SPY. You see Apple, Microsoft, big red boxes. I guess they were a little red today. Well, this one's green. And then Amazon is number 3, and you can't really tell because Google's a big weight here. But you go down here, go down to Analyze, SPY, and those are the weights. Apple, Microsoft, Amazon, Google, these are both Google. One's with voting rights, one's without. I don't know which is which. Then you got Berkshire Hathaway B class, and then United Healthcare, Tesla, Johnson & Johnson, ExxonMobil. And there's her Nvidia. So that's SPY. The tech sector of SPY also has a fund for tech. SPDR Trust Technology ETF. That's it. And you can see Nvidia's number 3 on that one. So that's where I get that number 3 from on QQQ. It's not, I don't know if it's exact or not. I just know it is for XLK. It won't let me pull up the QQQ holdings. Yeah, so I pretty much have to go off of, sorry for blinding everybody, the heat map. I have to go off the heat map. So it looks like Google is number 3, but it also looked like number 3 in the, I think it is. Yeah, it's gotta be. Yeah, Google's number 3, and then it's Amazon. Tesla not having as high weight as before because it's been dropping. Back to the charts. So SPY, QQQ, and then we're gonna have Apple, Y, king of the market, highest weight in SPY and QQQ. Not really gonna explain much more on that. Then it's Microsoft, Y, number 2 on the market. Again, if you go back to the Analyze, see the holdings for SPY. Just Apple and Microsoft by itself hold 12% of the market, almost 12. That's just by itself. It's ridiculous to not have both of these on your watch list. Next, I'm going to go with Amazon. Again, this is in no particular order. It's your preference on things. Not all of my tickers are going to be in the top 10. I do get a little wacky, you'll see. Why Amazon? It's the top weight in discretionary. What is discretionary? Those are the items that basically the consumers don't need to get, but still will in good market conditions. So they start to thrive in good good economies. And for that reason, my next one is going to be Tesla, which is the second highest weight in the discretionary sector. Tesla is super underrated as far as they're not just a car company, and they're not just an electric car company. They are a data company, and they have that auto drive, which is going to be a huge thing in the future. And all that data that they pull in on Tesla drivers, it's probably been priced in, but with all this drop that we've had, it's going to continue to go up in the future. I see it. So I have Amazon, Tesla. We're going to go with the semiconductors. I always pick two. It's NVIDIA, and AMD. Can't type. Again, these are not the highest weights in the S&P. You see it's number 12. But they are good trading stocks. And they are semiconductors, they'll be in the news, they'll have movement. They're very important. Very good upside. And yeah. And they have a few ETFs that you can choose. I'm just going to type these for reference. You have XOXX, I believe. Yeah. SMH. And then XOSS, which is the short version of XOXX. Let me go. Yeah, that is the semiconductor ETF. That is not what I want. Although I like that flexible chart. That's another one from Vanek. And then this is the short. So basically this does the opposite of whatever it did today. And you can see, I'll pull up the XOXX. Just keep in mind that. And it's the opposite. Nice pump up. Let me put SPY back, because it's just going to be where most of my trade reviews are. Okay, so those are going to be most of the tickers that I look at. I also do look at NEO just about every day. Nice, cheap stock. Good contracts. Cheap contracts. It's pretty solid in my opinion. Just to trade. Not really the fundamentals, it is Chinese. Also go with Baba. Again, same deal. It's like the Chinese Amazon. I know I'm going to add a couple of tickers that I don't look at. Well, I'm sorry, I look at, but I don't really chart or trade. I chart the intradays, I don't. Sometimes. But like say I don't have time, these will definitely be the least priority. So sometimes say if I get held up for the day, I'll just about trade these and leave the rest. Unless somebody else's that I have trust in the Discord is going to be looking at it too. I'm definitely not going to be charting it on that kind of day. Otherwise, I'm charting just these every single day. And I think I'm missing a couple. Oh, Boeing. Get that industrial in there. That's a really good stock too. Google. I know I was forgetting something. Google. And I like UNH for swings, not for day trades. Yeah, Google Google gets oh, and Netflix. This is in no particular order, so I'm gonna put Google and Netflix. There's just a couple tickers that I like to look at every day. I'll chart Netflix and Google every day too. So, okay. Went over the watch list, market weights. Now let's go over some of the trade reviews. These are all in the past month. I've had a lot of success in this group since I've joined. And I want to share what some of that was. So I pulled up some of these trade reviews here. So I'll just click on it and I'll be able to see what's what. But first I want to get to where I was there. So, oops. Okay, so I'm gonna change the time frame. Put it 30 days on the 2 minute. Because that one was a pretty good trade, I think. And I don't really trade on the 2 minute that often. And this was for November 10th. Okay. That's strange. I don't have anything set up there. Alright. I'm sure I did something that day. So. Okay. Yeah. Let's see what I did. Okay. I remember. This wasn't my best trade. But I still did it anyway. So this is what I did. I don't normally trade in the first 10 minutes, and there are some more levels that you can pick that I don't put on for your daily routine. I know Devin. I actually got this method from Devin from a previous trade, and what he did is he utilizes the pre-market midpoint sometimes. That's on his script. He uses a script for his levels. And I'm guessing he uses the pre-market midpoint and the midpoints of some of these candles. So for this one, I like that it held the 50% point. So I'll draw a fib there. So it holds the golden pocket if you go to the wick, and it holds the 50% if you get it to the meat of the bone. So really, you have a good, strong rejection there. Either way you go about it. So I got in here and basically took the ride down. And again, this is the first 10 minutes. I'm really not trying to stay in it. So all I did was wait till it got to a new low, which my target is below that. And these are moving quick, so I got out around here. And that was easy. But, oh, right here. Good trade, bad execution. Not my fault. Thank you, Weeble. Quick scalp at the open. I like the rejection of the midpoint of the opening candle. That's exactly what I did. I bought the put. Oh, and I bought it up there. Okay. And I sold in the next candle, which I actually was able to put my sell order then, but it didn't sell then. It really got in around the next candle when it started to pump up around here. And that took away most of the gains. Basically a break even. And this was going to be a quick 10%. Just in 4 minutes. Oh well, do what we can. That's part of life. So that's that was the first trade. Second one was the same one on a 5 minute. think this one was mental. Why is it? Oh, I'm on a 1 day. My mistake. I'll do. Alright. Let me go back here. Number 2 trade. Yeah, this was mental. 390.56. Alright, so this is what I liked about this trade. See, we had a nice initiating movement past this level here, the 390.56. Right there. I can see where I put my oval there. So that's like where I was looking. Is that where I was looking? 1305, 1310. No, it was here. Yeah, that's why it doesn't make sense. So, I'm looking there. And we got nice increasing volume through the price level. That's an ugly trend line. So it is increasing. That's better. And really what I'm looking for here is like, this is perfect right here. See, we get the first test and then decreasing volume to the downside. This is like super weak right here. I mean, even if we get like another candle and it's red, if it's still decreasing, it's like still so weak. So we get a little consolidating here around the area. Here is like the candle that matters. It's like that reset candle to start the next movement up. So this is where you should probably get in if you want to go for that retest. Much less aggressive entry. Get that increasing volume. Still slightly increasing, I believe, yeah. And then if you... Normally what I would do here is like I would add a 9 EMA to give me some kind of been wrong. Here we go. And I already have it set to 9. So that's good. Go back. Here we go. So you see, if we enter here, I'm going to use my 9 EMA to know when to exit to. Which, generally, I would take it to the next level, but this consolidating going on here, this isn't a bad idea. Especially with this increasing volume. But, you see, we still don't close below it. But with all this consolidating going on after it, my impatience might get to me. I'll admit that. Especially because we're getting closer to the end of the day at this point. Yeah, that consolidating here might piss me off, honestly. Sorry to say. But this is a good pattern right here to hold through. You know, it gets to a point where you see green, you take green. That's part of my philosophy too. So let's move on to trade number 3, which was Netflix on the 5-minute. On the 18th. Here we go. What did I do here? I'm just gonna keep the 9 EMA on here. Don't get confused. I'll let you know when I use it in my trades versus when I don't. Normally, normally I don't use them, but it does work pretty well for your exits. Because you know it's not gonna happen every time where the next it's not gonna get to the next target. You know, just because it goes here doesn't mean it has to take it down to here. Obviously it does and it bounces right off, but it doesn't have to. And I think this was what the trade was. Number 3. That is not it. Sorry, give me a second. That one. Yeah, that was exactly what my trade was. I utilized this. So let's see what it did. I took 0 days till expiration contracts, 287.5 puts from 125 to 138 for about 10%. So I didn't get in on the 40% entry. The 40% and 80% entry are just measures of confidence. The retest will always have higher confidence, and you can't have 100% confidence. So we use 40 and 80% figures to figure out how to measure the confidence. So we get that nice rejection there. 40% entry with volume. That's perfect for a 40%. Honestly, you can enter right there and probably look for like a stop loss at the high of this candle. Definitely want to close above this. That would be probably my stop loss, especially with the nice range it's got. So I don't get in here, but I do note it. I enter around here, but I was a bit late. Here's where it got me, and I'll show you on the big chart. This is still increasing volume through here. It doesn't matter that there was a green candle. That's still increasing volume, not all of the downside, but you just have good push down. So, anyway, I missed the entry on the contracts I initially wanted to get, so I got cheaper ones. They were a little more out of the money, but you take what you can get. And I exited pretty much at the next level. Still 10%. This would have been let's see, $2 to 70. That's 35%, I think. So you know what I mean. That's what we do. And there's gonna be times when you have a late entry or you miss an entry. That's just part of the game. You gotta learn to deal with it and do your best to not have it happen again. Decreasing volume around the consolidation, which is okay. Although it's definitely not the greatest thing that you're looking for the movement down. There was a weakness, but that's what confused me. It wasn't until I saw, oh wait a minute, that volume is actually increasing from this point. It's still going down. It wants to push down. And it did. It did exactly that. And to be fair, I probably would have been a little early on the 290 put entry as is, because I think I got in once I saw that it was increasing volume on this candle. So that's this one. So that's another below. So once it got above the volume with this one, I was ready to get in. I also wanted to wait for a closer point to the close of the candle. You always want to wait for the close of the candle. So that was it. That was that trade. Which one was Apple? I don't have Apple on here, but I'll show you it anyway, I think. This was a really good one. Went from 320 to 375. I think that's about 15% or so. Here, I'll get the calculator up. Sorry for blinding everybody. It's a 17% increase. Jeez. So let's see what I did here. So we had done this in the stream live. Bueller walked us through this. We had been watching Apple. I look at Apple a lot. It's always good to me. You know, definitely once you start to break above the range of the day, you can still look for targets $1 out. You know, 149, 150, 151. So, same goes on the opposite side. Anyway, we got 4 hammers in a row. All these are bullish indicators by itself, just a bullish candlestick. This one's not as much of a hammer, but I'll still consider it one. Really easy, and you get the retest. That's what I'm looking for. I'm looking for a break above with volume, goes back down, and I see it's already ready to bounce. Get in on that candle, boom, get into the next one. Easy trade. And it went down right after too. I remember that. Bears having decreasing volume after breakout gives me more confidence in the trade. That decreasing volume coming right here, going down. And it really is as simple as that. I would say probably the most difficult part is to not force the trade. You see a good setup, you take a good setup. You're trying to see a setup, what can happen? You're forcing it. You force the setup, you end up with a bad trade. And even if you end up green, it doesn't mean it wasn't a bad trade. It can give you a false confidence. This one was missed, but it was so good. And this one was, Bueller explained this to me. There wasn't a lot going in the market. This was literally the only good ticker in that moment. I don't think many of us traded that day, or traded a lot. So I was watching a video until I wasn't, because I got bored. Sorry to say. And I do get bored. That happens to me. I gotta work on that. And we all have things that we need to work on. Mine is I need to stop getting bored, keep my eyes glued to the screen, probably get more monitors so I can look at more things instead of switching between the tickers. So, what did I do here? Drew the Fib retracement from the start of the rally to where it starts to slow down. Okay. And I grabbed it on the meat of the bone at both times. And it is appropriate to grab it from the wicks as well. In this case, you pretty much end up in the same areas. But I like the meat sometimes too. Pause. I like the meat of the bone. So, anyway. We get that. We get the nice golden pocket retest happening. It holds the golden pocket, touches the control point 50%, breaks below the golden pocket. So but it's with decreasing volume. It's very weak. And then we have this nice hammer forming as well, giving a nice bullish indication. Now, you don't want to enter this by itself, but this is a nice bullish indication because it's telling the bears, hey, get the hell out of there. Breaks the golden pocket with volume. Definitely a good entry there. Breaks the control point, the 50% mark, with volume. And gets to the next target. And gets to the next target. So, this is like a perfect trade. Personally, my target here would be definitely the pre-market high or the previous day close, either or. And it still breaks above with volume. This is still a good point to see a retest of the pre-market high here for even more upside. Get to this zone here, which I'm not sure if it did, but we had already moved up a decent amount. You don't want to be greedy either. Yeah, trade one's playing without me about 40 minutes later. And this takes a long time sometimes. This is right here, what you see here is 2 hours and 15 minutes worth of time. I mean, when I was looking at it here, it was 10 o'clock, and when it's over here, it's 10:40. 40 minutes later, like I said. And then even then, you still have more time to get to the next target. It's 11:15. So from 10:40 to 11:15, another 35 minutes. You can have so much going on. You can't get bored. You can't afford to get bored. So I'm at number 5. Number 6. Oh, this was a loss. Super unnecessary. I got emotional on this one. I think, yeah. I like the increasing volume here to push through the pre-market high. And I tried to get the catch here with increasing volume here, and I'm like, oh, that's good. I think I messed up here too. Yeah, that's probably why. This is not the candle I would have wanted to enter on, in hindsight. And I drew the trend lines after the fact. I'm like, oh, obviously there's a channel. Anyway, I learned my lesson. Plus, it's already 2 o'clock when I take this trade, 2:15. Definitely not the time to be entering anything aggressively, and I didn't, so I'm actually happy I took the minimal loss. This is less than a 10% loss, and so is this. Anytime you can get out of a trade with a stop loss of less than 10%, and then it still doesn't, it doesn't go your way, you don't marry it, you don't try to force it. That's what it's all about. Keep your losses to a minimum. So you see, even I got my good reactions here. I got the fire, and I got the sigh because I know I messed up getting emotional. You don't get emotional. And I did take more trades after this, but luckily they were all break evens. This could have been a lot worse. Anyway, let me go back to this one. I think this is the same one. No. Quick trade for 5%. This was not as much as I wanted, but an easy trade. Super easy. Hold of the 146 level with the target at a high day. Lowering volume confirms a good sell there. Yeah. I took the increasing volume here. Already retested it. And yeah, take it to the high day. Super easy trades. There's not much to it. That 146 zone is just a good level in general. It's 146. It's a dollar mark. That's where we get it. And I was looking for like a passive trade here. I think this was a Friday. So 11/28 a Friday. Oh no, it was a Wednesday. Oh, you know what? That was the day Powell talked. Not Powell. I'm losing my mind. Powell talked this week. I think it seems slower that day anyway. Regardless, I took the trade. Oh, I know why I took it quick. It was in the 1 minute. And I believe, yeah, it was like in the first 10 minutes. Like, that's why it was quick. You don't want to be trading in the first 10 minutes. So you see, when I entered in that candle, that was like 9:39. It's like right there. What's my next trade? What's that one? Yeah, that's that. So I'm on this one now. Oh, this one was good. Again, another 1 minute trade, and I do have my 90 MA here. This was also a mental trade. I had some news, unfortunate news, but you got to be prepared to not trade when you're not emotionally stable or right there. So you gotta know when to not be in anything. Definitely just helps to visualize. So here we got the increasing bear volume, but again, we got that nice bull candle rejecting the pre-market low. That's the pre-market low, not the high. I marked that one. Anyway, take that. Would have entered there. I was literally about to enter here until I got that unfortunate news, which, by the way, is not so unfortunate anymore. It just was at the time. So happy to say that things are improving. Anyway, got the rejection there. Exit here. Right, my next target. Previous day close or the high. This was the same level. 110 to 152. If you have a few contracts, easy money. Make 120 bucks right there off of 3 contracts. And really, this could be one that you grab 5 because it's only like 550. It's not the biggest amount in the world. Really, you can just get out, keep a tight stop loss here if you really want to. Personally, if I had that much, I would keep my stop loss around that area. You could also keep it around here. It's like a nice resistance, the 406 even. But you see, we're dealing with parameters that are pretty tight. 406.59 to 407.57. It's about $1 range. So a 36 cent difference between or even a 58 cent difference to 406. That's not reasonable. But you are going to have a pretty heavy. It's going to hurt. It always will. At least in my case. But that was the trade plan. Also, if you wanted to stay in, you could wait till across the 90 MA, which I checked, it was still like 152 around that point. So this is also the 1 minute. So these are happening. These are quick candles. That's probably why I didn't just wait for like a close on the 5 minute. Took a page out of Leland's book and Devon's, because he uses the 2 minute, and it would still be a similar candle right here. And yeah, that was a really good trade in my head. So I'm getting near the bottom of my list now. I think I picked this one already. Yep. So now we're on this second to the last one. And then we'll do the last one of the day, and we'll wrap the video there. This was the Powell talk. I can actually go back to this one, but I think it's fine through here. I'll just open it on the webpage. Here we go. So Powell starts to speak. We get that big pump in volume. I'm waiting for a slowdown. Not here. Still too soon. This is the 1 minute. So I take it from the wick to the wick, the high, where we start to really slow down. It's around here where I draw the fib. That's around that time. And you see, we hold a 50%. I actually get into contracts, and I take it to the next level. I did do that. I just didn't record the actual contracts. Everything was moving so quick. And I was scalping in between these levels until we hit about 405, and I said I'm done. And sorry if I'm sounding tired. It is 11:39. I've been up all day. But I'm gonna wrap the video up with this. This was an example. And I think I actually took this one too. Yeah, I did. I did take this one. Just a simple fib. Take it from the start to where we slow down. This is from the body of the candle to the body of the candle. Draw the fib. Get some levels on here to trade with. 40% entry, which is not really a 40% because it doesn't really close above the golden pocket, but it's still testing it. And it does it again twice, so you know it's rejecting it here. So you get back down. You see it gets right through with volume, and I marked this just because it tested again right here. You take it to the next level, right there. Previous day, whatever that was, and then the open, which is the main level. Previous day, the current day open is like an overpowered level. It's something that you want to always look for. I don't remember what it did after this, but I was already out. Took my money on that one. So I'll wrap that up there. So you can see this community has had a lot of successful trades. It's very consistent. You can see what where my bread and butter comes from, these retests. It's difficult because you see it go up and sometimes it just keeps going up and it'll go without you and you have to find something else or you miss out. But with discipline, you can keep finding these retests. You could definitely enter on this one. You just have to hold it longer. You might want a stronger contract, maybe more in the money with longer time, because if you get like a 0 DT, you definitely don't want to be holding through all this. It's just data's gonna start to eat into your contract. Remember, this is 35 to 40 minutes right here of all this consolidating. You don't have much time left in the day. So that's definitely something to take into account as well. Join the Bueller Buys community. Get some of this education down. You can see we have a whole educational section, which this is really good. Come join us. Join the BB Stock and Options Academy. This is more content from Bueller and other friends, J Bake, Leland, so many others, Troy. Definitely give it a chance. We don't spoon feed in our chat either. We have signals. I'm not going to show them here, but it's just we try not to rely on them solely. We try to rely on intuition. Understand why we get what we get. So that's that, guys. I'm going to wrap it up here. It's my first video, so have a good night.